Hello, everybody. You're welcome to our channel today. This is C Brown here, and I want to share with you what we are looking at on GBPUSD today. So, moving our chart to GBPUSD, we're looking at the week 33. Welcome to week 33. We want to be looking at what the market holds for us in the next coming week. Now, remember, the previous week, which we talked about, week 32, we had a lot of challenges last week. The market was ranging everywhere. We could see multiple ranges section here throughout last week until we finally broke out of the range, and then we had the pullback. So we still expect price to go towards the downside. But before we go into more detail of how it's going to be like this week, I would like you to, if you are just joining us for the first time, I would like you to hit the subscribe button, hit the like button on this particular video, because we have a lot to talk about. Not too much of a big deal that the market is going to do, but I want to help some of you to avoid what just happened last week being happening again this week. So I want to avoid some of those things, and I'm going to be showing you some fundamental facts that I'm looking at that will help us to make those decisions for this week 33. And also we'll be looking at Euro USD video, but that will be the second video. So ensure you watch Euro USD, because that is a currency pair that I might be trading this coming week depending on the market situation. All right, so now let's get to it. The first thing is that we see right here is that the market created multiple reactions to this zone, which is on the 4-hour time frame. We see multiple reactions right here, and finally price broke outside that zone of multiple reaction, which is consolidation. Okay, so many a times when the market act like this, it shows that there is pressure in the market. There's pressure on the currency pairs that you're trading. Either there's pressure on the US dollars or there's pressure on GBP USD, either both. So they have pressure. There's pressure. What I mean by pressure is we have a lot of demands coming in. Supply and demand is high from both currency pairs. So you can have that mitigation. That's a state of prices creating liquidity, creating equilibrium in the market. So we want to look at those areas today and be able to position ourselves this coming week 33. So first of all, we see days, and obviously the market looked trending to the downside to us. Obviously, we are looking at a downtrend overall, right? The market looks like it's going to sell more and more. But the problem we're having is the US dollars. The strength of the US dollars is affecting this market. And that's what I want to look at today. First of all, let's look at the technical, and then later we want to move to the other side of the fundamental, and then we'll consider also the sentimental analysis. So we're looking at three areas of the market today: the technical, fundamental, and then sentimental analysis. I hope you're ready for this. Okay, now let's look at, first of all, the technicals. We have markets creating structure here. We can see that the market has been creating lower highs, lower lows. Okay, created lower lows, and then the market pushed up to create another low, and then failed to create a new lower high, and then push up a bit to create a new higher high, and then smash again. So we now have consolidations around here until this structure was broken by this drop, and now we have another push up there, creating a slight lower high here to create a more down to the lower low. But obviously what we're trying to find out is the market trending down. But we had a moment of consolidation, and now the market is trying to trend to the downside by breaking out of the consolidation. But we still have another zone here that we need to put into consideration, whereby we have a rejection price at that level. If we take this border out, so we'll be looking at this particular range on the 4-hour right now. So this is the obvious range we're looking at. But let's go to the daily so that we can look at exactly what is going on the time frame. If you check the daily, you will see that the market actually is selling, is looking like a sell market to me, because we have the previous low taken out by breaking down and another push up, and then it's heading downward. So we will be looking at on the 4 hour, on the 1 hour time daily time frame, we should be looking at this key area here for price action to react. So if we take this border out, that's the 4 hour range, we should be looking at the price coming down to this low. And if you measure that around this level, that's about 92, 93 pips, about almost 100 pip right there. So we have almost 100 pip or 90 something pips that the price may still sell down to break that low. Already we had a pullback, so we can see that the market is selling on the higher time frame, which is the daily. But the challenge is, if you check this push up, okay, this massive push up that we see that created like a higher high, looking at to the left, we see market structure right there. We can see that price push up to create a new high to break that structure, pull back in a bit, and then create another push up to break that structure. We can see that the market, this may be a kind of a possible retracement of this intentional push up. Okay, but we are not sure yet until this low is taken out. So let me retrace that. First of all, we want the market, okay, haven't given us these structures here. We have structure, break of structure, break of structure. Over here created a new higher high, and then the market pull back into the zone and then pull back again to create another lower high. But there was no structure broken on the left side. If you check the left side, there's no structure broken. So we still have the reasonable pullback going on, obviously, regarding this low. So if we look at that structure, then we should be saying the market is still a little bit bullish on the daily, but bearish on the 4 hour. And then we should be looking at the conflict there. Okay, what's going on? Okay, first of all, let me show you this. If I were to use my tool, this fib, okay, to measure this zone right here to the high, we see that price, we expect price to retrace from 61 to 70 or 75 or 78. But we already see from this analysis, from this technical analysis, that the market just broke below each of them. Market, look at that. Price reacted to 50, it bounced up, dropped, break below it, reacted to 60, break above, break below it again, and then reacted to 75, break above, break below it. So you can see that the market is creating lower high, lower lows to break those fib levels, disregarding them. Actually, the fib levels are being disregarded. It's not being respected. So that's why we anticipate that the market will come down to this low, which is filling up this whole push up, 100% imbalance field. So we want this whole push up to be filled. But remember, price is still trading within this auto blockade, this small move candle here inside bar that we see there. So price may still react to that level and start heading up. But we will not be looking for a buy until this counter trend line is broken. If this counter trend price push above and head back up by pushing all the way up here, then break structure and then pull back into the zone, then we should be looking for more buys to take out this high and more to the upside. So that is the way you want to see it. Let me retrace that again. First of all, this is the daily time frame. Okay, so we are looking at this whole movement here. So if we go to the 4 hour, we see that price failed to hold on the 61 and 75% region. This region price failed to hold. So the fib is not holding, which obviously would have allowed us to understand the movement in the higher time frame of the 4 hour. Okay, so right now what we're looking at is price may still drop below this zone, drop into the zone, and then before probably reacting, okay, and then creating probably a W pattern before heading up. That could happen. We are not sure yet, but we want this trend line to be broken. If this trend line is not broken, we can't be looking for buys. Rather, we'll be looking for more sells. So put this trend line on your chart so you'll be able to mark it. So whenever price break above it, you should be looking for more buys. But if you see double bottom or price creating a higher low, this low higher than this low, then you should be looking for a buy, because it shows that the market will want to push higher now. So you should be looking for that opportunity on the 4-hour time frame, mind you, on the 4-hour time frame, which is very important. Okay, now let's look at it from the previous low. This is the previous low on the daily that created that push to the upside. So now if price fails to break that low, definitely we're going to have like a trend line somewhere around there. Okay, just like that for now. And then we want to look at what price will do. Will it break it? Will it push up? Whatever you want to do. So we can look at price created. We saw price just created this imbalance here, this massive drop. And then we'll have that retracement up to that level and price is heading down. So possibly on GU, we still have that consolidation going on, but gradually creating lower highs, lower lows to the downside until we hit this bottom. We want to hit this fib level right here, which is this bottom right here. So which is where price is at 126, 1.2600. Yeah, 1.2600. So we're looking at price action at 1.2600 for possible retracement. Price may drop a little bit and then create that push up, and then we start looking for opportunity to buy. But at the moment, the market is still a downtrend. So do not try to buy it yet until obviously this trend line on the 4-hour is broken. Then we'll be looking for buys. But at the moment, any reasonable break of structure to this lower side, we'll look for pullback and sell the more until price creates a structure that will make us to look for buys. And one of the structure you will want to look for buys is when this price create this low, maybe break structure there and push up a little bit, and then create this structure without pushing breaking the next low that it created. Then you should be looking for structure break here, push higher, a pull back into that zone, and then you're heading back up. That's what you want to look at for in the market before any other thing to buy. But at the moment, we are in a sell zone and it's very close to where price will start changing direction. But we want to watch what price does when it pushes down to 1.2600. So that is on the set fundamental technical analysis that we have for today. But let's look at the fundamentals. First of all, we want to check what do we have for the news next week. What do we have? Okay, let's look at the news of the coming week calendar. And we want to look at this whole week starting from Monday 14th. So from Monday 14th, there is nothing to think about right now. On Tuesday, we have a lot of news coming in from the Canada dollars. And also we have a lot of news coming in from the AUD. And GBP, we have chairman count change, climate count change. And then we have US dollars, coil retail sales. So we have some fundamentals coming in. Okay. Now we also have Wednesday, CPI, GBP coming in, CPI, USD, also FOMC. So it's a busy week coming in next week. So it's a massive busy week. We have unemployment claims also coming in on Thursday. Then on Friday, obviously retail sales, which is low impact news by 7 a.m. And apart from that, the rest of the day, one can decide to trade. Now, this is on the surface of the fundamentals. Now, I want to take a little bit deeper into fundamentals, whereby I use a particular software that was created by one of my mentor, and I want to look at this Edge Fund Finder, Edge Finder, A1 Edge Finder. It's one of my mentor that has these two that I bought it from. Now, let me show you something on this Edge Finder quickly, just to give you an idea of what the big guys are doing. Smart Money Tracker tells us this is fundamentals, strictly fundamentals. Okay, I'm looking at fundamentals strictly. Okay, now this is the big guys picture here. The COT data report for the week has already released for the week. So we still have Euro is strong, USD strong, British pounds. We have the big guys buying British pounds. So we have a lot of order coming in on British pounds. And also we have a lot of order coming in on USD. So we have almost equal amounts, just a little bit different, but we have huge buyers of the big guys, smart money trackers, smart money traders. These big guys are actually looking to buy more US dollars and also buy more British pounds. So we have these two currency in conflict. So if you check the British pounds, we have the short position is 36,000 plus and the long position is 83,000 plus. That's a lot. That is on British pounds. So we see that the contract on British pounds is high. Then also USD, if you check the USD, we have 17,000 against 14,000, which is not a lot, but a slight difference. But what I want you to pay attention to is this. I want to pay attention to this figure here, which is 69 against 54. That is huge. So in other words, we have like the two currency pair are strong. They're going to be very strong. And that's what happened last week. The two currency pair were massively strong. So let's look at the retail sentiment for a moment so that you understand what I'm trying to say. Now, we're looking at GBP USD around this zone, which is, you see that? You see what I mean? So British pounds USD is 50. Look at that. 55 against 45. 55 against 45. This is the reason why last week we had a lot of struggle in the market. The market was not giving us clarity. There's so much pressure. Why? Because the sentiment shows that the buyers, the USD is being bought high, and then also the British pounds is being bought high. Do you understand that? So that means there's pressure in it. The market is, the both currency pair are very strong. Now I say, what do you mean? Well, let me share with you another tool here that will help you. We see this is what is a free tool, currency strength meter. Look at that. GBP is very strong. USD is very strong. So again, confirming what I just told you. So that is the reason why this coming week, we got to be very careful trading GBP USD. Like I said, I might be focusing on Euro USD because we have on Euro USD right now, we have a lot of Euro is a bit weak and we have USD strong. So we might be able to see opportunity on Euro USD compared to GBP USD this week. Now let's go back to the chart a bit and then see what that would be like for us. So like I already said, I've just showed you the technical analysis of GU. I've showed you the fundamental analysis, and I've also showed you the sentimental analysis. So under the sentimental analysis, we see that both currency pair are struggling. They are pairing head to heads. That means both currencies are very strong. So you're going to have a lot of spikes, a lot of volatility, a lot of what do you call consolidation in the market. So be careful how you trade GU this week. This is my honest view on this, and I'm trying to help you guys save your account this week. Be careful on GBP USD. I hope you guys enjoyed this video. And if you like it, hit the like button. And also, if you enjoyed the video, why not subscribe? Hit the subscribe button and share this video. And those of you who are interested in joining our team, the Telegram group is in the description. Click the link right there. Join our group. We are doing so much there. And also, you want to join our trading team. The link is also there. Take the course or join the mentorship course that is on offer right now for everyone who wish to learn how to trade, especially if you're a beginner. So guys, have a beautiful time looking at this video again. Watch it again, understand what I just said so that you be careful. But meanwhile, enjoy your week 33, as you trade with more profit in your bag. See you next week. Bye for now. Bye for now.